Good afternoon, investors. You are now on KleverStock with me, Madhveshwari, and I will be serving you with a midday roundup with the latest market updates from this morning up until now. Kicking it off with the Bursa Malaysia updates, traders on Bursa Malaysia turned to profit-taking on Thursday morning following the US Federal Reserve's decision to maintain interest rates, a move that prompted investors to cash in on recent multi-year highs. The absence of fresh bullish catalysts combined with toppish valuations led the benchmark FBMKLCI to retreat 11.88 points to 1,753.31. The market reaction follows an overnight announcement from the US Central Bank, which held the federal funds rate steady at 3.50% to 3.75%. This marked the first pause in the Fed's rate-cutting cycle since July 2025. While the pause was widely anticipated, it has shifted market expectations toward a potential wait-and-see period, with analysts now eyeing June for the next possible reduction. TA Securities noted on its outlook that the local benchmark is currently undergoing a healthy correction after hitting a 7-year peak earlier this week. The research house stated that the local benchmark index may extend its near-term correction amid overbought technical conditions, with profit-taking pressure intensifying following the recent rally. It also identified immediate psychological support at 1,700 level, while resistance remains firm at 1,804. Major blue-chip stocks led the morning's decline, with healthcare giant IHH falling 11 cents to RM8 ringgit 91 cent, and Maybank dropping 14 cents to 11 ringgit 55 cent. Consumer heavyweight PPB Group also saw a significant slide, losing 20 cents to trade at 11 ringgit 20 cent. Despite the immediate pullback, market vitality remains supported by regional shifts. Rakuten Trade suggested that Malaysia could become a preferred destination for global investors as funds begins to route out of Indonesia. This follows a warning from MSCI regarding a potential downgrade of Indonesian equities to frontier market status due to instability concerns, which triggered a sharp 7% plunge in the Jakarta Composite Index yesterday. Among the morning's most active counters, ISF Group Berhad maintained its momentum following yesterday's stellar debut, rising 2.5 cents to 50.5 cents. Valesto Energy edged down 0.5% to 30 cents, 0.5 cent to 30 cents, while Niche Capital Amas gained 1 cent to 12.5 cents on high volume. Moving on to our local currency and foreign exchange, the Malaysian ringgit continued its upward momentum on Thursday morning, opening marginally firmer against the US dollar as investors digested the US Federal Reserve latest interest rate decision. The local currency was quoted at 3.9130 or 3.9230 versus the greenback, a slight improvement from Wednesday's close of 3.9175 or 3.9235. This morning's performance marks a significant milestone, bringing the ringgit to its strongest valuation since April 2018, when it touched the 3.9030 level. The rally is being driven by a combination of both a US dollar softening and rising confidence in Malaysia's resilient economic fundamentals. The US Federal Reserve concluded its first meeting of the year of Wednesday by maintaining the federal funds rate between 3.50% and 3.75%. While the pause was widely expected, investors are now closely monitoring and transition of Fed leadership as Jerome Powell's term concludes in May. Bank Muamalat Malaysia Berhad Chief Economist Dr. Muhammad Afzal Nizam Abdul Rashid noted that while the US dollar index saw a slight 0.26% uptick this morning, the ringgit remains supported by the narrowing interest rate gap between Malaysia and the United States. Dr. Afzal Nizam said that the ringgit's strength is a reflection of the market's recognition of our diversified economy and structural reforms. He added that the government's move forward targeted subsidies, including the transition from bulk RON 95 to Budi 95 mechanism, has reinforced fiscal credibility and investor appetite for the local note. As the ringgit inches closer to the psychological 3.90 level, analysts are looking toward the 13th Malaysia Plan and ongoing tech investment in the semiconductor and data center sectors as the next set of catalysts to sustain the currency's performance through the first half of the year. Now for some local economic news. Foreign investors' interest in Malaysia's stock market has gathered notable momentum at the start of 2026, supported by stronger trading activity, currency strength and renewed confidence in large-cap sectors. Overseas funds have shown sustained engagement rather than a short-lived rebound, with investors positioning for a broadening investment upcycle. Early-year trading patterns reveal the property sector has emerged as the strongest performer, with technology and financials following closely. This shift reflects a rotation towards cyclical and growth-linked themes, reinforced by rising liquidity and improving macroeconomics signals. Maybank Investment Bank Research, Maybank IB, noted in its strategy report that the pickup in foreign participation since late 2025 has carried strong momentum into the new year. Supporting this optimism are advanced gross domestic product (GDP) growth estimates for the fourth quarter of 2025, which reportedly reached 5.7%, exceeding market expectations. Currency tailwinds have also played a role, with the ringgit breaking lower against the US dollar to close at 3.9640 on January 26, its strongest level in years. Trading activity remains a key indicator of this renewed interest. Average daily trading value ADTV recently climbed to a high of 4.2 billion ringgit, significantly above the January 2026 year-to-date average of 3.1 billion ringgit. Foreign investors' participation has remained steady at 36% compared to the 2025 average of 41%. Data from MBSB research corroborated this, showing that foreign investors remained net buyers for a third consecutive week, recording 510.9 million ringgit in net foreign inflows for the week ended January 23. Following the recent multi-year high breakout, technical analysts suggest that a pullback could be imminent, identifying 1,685 and 1,670 points as key support levels. Continuing with more economic news updates, earnings in the plantation sector are projected to contract by 5.6% year-on-year in 2026, following a robust estimated growth of 15.6% in 2025. According to the recent report by Affin Hwang Investment Bank Research, this reversal is primarily driven by lower average selling price (ASP) consumptions for crude palm oil and updated production estimates. In its latest note to clients, the research house adjusted its CPO ASP assumptions downward to between 4,100 ringgit and 4,250 ringgit per ton for 2026. This revision follows Indonesia's decision to delay its mandatory B50 biodiesel mandate, a move that briefly pushed CPO prices below the 4,000 ringgit mark before a modest recovery. The research house noted that we believe CPO prices are currently supported by expectations of declined production in the first quarter of 2026. This is due to the monsoon season as well as stronger demand ahead of the lunar year and the start of Ramadan in February. Indonesia remains the primary swing factor of the global market, not only due to its production volume but also its aggressive regulatory environment. Beyond the biodiesel delay, the Indonesian government has intensified a crackdown on allegedly illegal land use. By the end of 2025, approximately 4.1 million hectares of palm oil land had been seized, with further confiscations anticipated throughout 2026. While these supply disruptions can provide short-term support for prices, Arfin Huang cautioned that they significantly cloud the sector's long-term earnings visibility. The land seizures heighten regulatory uncertainty and increase environmental, social and governance (ESG) risk for companies with significant Indonesian exposure. Additionally, Indonesia plans to raise CPO export levies to 12.5% starting March 2026 to fund its ongoing biodiesel subsidies. Given these volatile conditions, Arfin Huang maintains a neutral stance on the sector. The research house has identified Johor Plantations Group Berhad and Ta'an Holdings Berhad as its top picks, favoring companies with purely Malaysian operations to avoid the legal and regulatory complexities currently unfolding in Indonesia. Analysts warn that price volatility is likely to persist as the industry navigates extreme weather patterns, global inventory shifts, and evolving biofuel policies. We'll now take a short break, but don't go away. We'll return shortly with the corporate news developments. Welcome back to the Midday Roundup. Let's continue with some corporate news updates. Eldridge Energy Holdings Berhad is setting its sights on the Middle East, initiating a strategic assessment for a collaboration with Saudi Arabia's Green Stream LLC. The partnership aims to explore international markets for biomass and renewable energy solutions, aligning with Saudi Arabia's rapid push forward energy diversification under its Vision 2030 framework. The two companies have signed a memorandum of understanding to evaluate collaboration opportunities within the kingdom. The evaluation will include technical testing and commercial assessments specifically for biomass and waste-to-energy or WTE applications. The focus remains on identifying renewable energy solutions that are both environmentally sustainable and commercially viable for the Saudi market. Eldridge Energy CEO Oliver Yeo said that the MOU represents an early step in assessing opportunities beyond the company's existing markets. He also noted that Saudi Arabia and the broader Middle East represent an emerging landscape for renewable energy. The announcement follows Eldridge Energy's recent participation in the IF80 Saudi Arabia's event in Riyadh, held from January 26 to 28, 2026. The trade fair, which focuses on wastewater and environmental technologies, served as a platform for the group to engage with regional stakeholders and gain insights into local regulatory frameworks and demand dynamics. This move into the Middle East follows a series of regional expansions for Eldridge, which recently signed a major biomass supply agreement in Thailand. As the group scales its operations, it continues to leverage its expertise in biomass fuel products, primarily palm kernel, shells and wood pellets, to meet the growing global demand for clean energy. Up next, we have some business updates. Axis Real Estate Investment Trust, or Axis REIT, has expressed a positive outlook for the coming year following a strong financial performance in 2025, driven by high occupancy across its industrial-focused portfolio and disciplined cost management. For the fourth quarter ended December 31, 2025, the group reported a 47% year-on-year surge in net income to 133.9 million ringgit, translating to an earnings per share of 6.62 cents. The quarter's robust results were significantly boosted by a 86.3 million ringgit fair value gain on its investment properties, alongside a 4% increase in revenue to 91.3 million ringgit. For the full financial year 2025, net income rose 34% to 282 million ringgit, while total revenue climbed 14% to 364.2 million ringgit, reflecting the trust's ability to generate higher rental contribution from its expanding asset base. Asset Rate Managers Berhad CEO Leong Kit Mei noted that the trust is well positioned to capitalize on Malaysia's key industrial corridors, including the Klang Valley, Penang and Johor. These regions remain highly attractive to multinational corporations seeking efficient manufacturing and logistics hubs. Leong stated that in 2025, we successfully executed 3 sale and purchase agreements and entered into a conditional letter of offer to acquire several strategically located industrial properties across these growth corridors. A significant milestone was achieved recently on January 27, 2026, with the completion of an industrial property acquisition in Port Klam, which brought the trust's total portfolio to 70 properties. As of the end of 2025, the portfolio maintained a healthy 94% occupancy rate and a weighted average lease expiry WALE of 4.4 years. The trust currently manages 15 million square feet of space with a total asset value of 5.36 billion ringgit. The thrust growth is further supported by a 1.68% increase in property valuations following a year-end revolution by RHB trustees Berhad, bringing its net asset value per unit to 1 ringgit 69 cent. In line with its performance, Axis Rate has declared a final income distribution of 2.75 cent per unit for quarter 25. The ex-date for the distribution is set for February 12, 2026, with payment scheduled for February 27, 2026. Finally, wrapping up, we finally measure with corporate developments and deals across Malaysia. BM Greentech Berhad has secured constructions and supply contracts worth a total of 71.8 million ringgit linked to a 36 megawatt peak solar plants with battery energy storage systems project a KLI Aeropolis. Powerhall Holding Berhad Unit Powerhall International Sendirian Berhad has expected a 68.5 million ringgit purchase order from a multinational technology corporation specializing in data centers. Johan Corp Berhad has secured 2 piling contracts worth a combined 32.2 million ringgit from subsidiaries of Sunway Berhad, marking its first expansion into Johor. Next, OCK Group Berhad subsidiaries OCK Datawave Sendirian Berhad has entered into a distributorship agreement with Fujikura effective from January to December 2026 to distribute Fujikura's wrapping tube, optical fiber cable solutions and related accessories. Next, we have Kinergy Advancement Berhad is selling at 49% stake in its power project company to Thailand's private power producer B Green Power Public for 41.5 million ringgit. And Sasbadi Holdings Berhad has entered into a non-binding tripartite MOU with Intel Microelectronics Sendirian Berhad and My Storage Technology Sendirian Berhad to explore collaboration in education technology across Southeast Asia, starting with Malaysia. And Axis Real Estate Investment Trust posted a higher net profit, 133.9 million ringgit for the fourth quarter versus 91 million ringgit a year earlier, supported by resilient net property income. That's a wrap for Midday Roundup with me, Madhaveshwari on KleverStock. Thank you for choosing us. Investors, stay tuned for our upcoming live stream programs.